Next up, we have Marco Arosti, who will be discussing clean energy economics and the impact on oil and gas. Welcome, Marco.
Thank you, everybody. My name is Marco Arosti. I'm the Managing Director of Phoenician Group. At Phoenician, we manage money, advise, and invest over multiple sectors, and clean energy and natural resources are two of them. So today we're going to talk about the interrelations between these two sectors and how we look at trends over the natural resource sectors which are impacted by clean energy drivers. So first and foremost, for us it's critical to distinguish what are the key trends within clean energy. There are many trends, but it's important to highlight what are the two trends which we think will really drive the sector forwards. So everyone is familiar with how various sources of energy on the clean energy space are becoming more cost effective. Wind, as an example, clearly 67% decrease over the last 10 years from a levelized cost of energy of 150 megawatt, US dollar under 50 megawatt hour to 50 megawatt hour. Clearly, utility scale solar and residential scale solar are also very, very key. But for us, it's clearly utility scale solar, which is the most impressive trend in the clean energy space when it comes to energy production. We have seen recently a country in Saudi Arabia where utility scale solar is producing energy on a levelized cost of energy of basically $0.02 per kilowatt hour. So this is impressive because it's actually the cost of energy in this particular contract is lower than the cost of calories contained in the coal, in the actual physical commodity. So we can't really underestimate how solar is becoming more and more prominent in this space, and is actually getting more and more inroads in latitudes like Saudi Arabia, of course, tropical latitudes where solar is extremely beneficial. To give an example, northern Italy, 900 hours of radiation level per year, southern Italy, 1,200 hours. So it's very critical to understand where these trends will have an impact. But clearly we see the drop in cost per kilowatt hour of utility scale solar as a key trend to bear in mind. The second trend, which we think is extremely important for clean energy space, is the cost of battery storage. When I moved to Hong Kong 10 years ago, it cost, with the lithium-ion battery, roughly 1,600 US dollar per kilowatt hour to store energy. Today, we're about 190. So this is a huge trend, and I think the two trends are correlated, but whereas on the battery storage, there's a bottom, which is the cost of lithium with current technology. We can't really go too low than probably under 90 kilowatt hour per kilowatt of storage. Whereas on the solar side, the bottom, there's really no bottom because silicon is the main commodity. So there could be a kind of a Moore law applied there, like semiconductor cost of per unit being decreasing very rapidly. So those two, in our view, are really the key trends to bear in mind when we look at clean energy space and how it will impact the resource sector. So if we move forward here, just an illustration of how clearly solar in particular, but most importantly, utility scale solar is becoming relevant everywhere, but most importantly in tropical latitudes. Let's move on now to transportation and to essentially internal combustion engines, and how automotive today still represent 60% of today crude oil consumption. There's a massive headwinds ahead for internal combustion engines. Britain and France are banning cars in 2040. China and India are moving very soon to ban internal combustion engines up to 2030. So there are today only 2 million electric vehicles on the road, so 0.5% of the total world automotive vehicles. However, battery storage cost, the electrification of the fleet is actually a reality, and we think this is really a key trend for us to keep in mind when we look at natural resource companies, natural resource sectors. Some countries are moving faster than others. Potentially New Zealand is looking at total ban on future offshore oil and gas exploration, because they're looking at, of course, the developing technology of utility-scale solars. They think they are one of the countries that could benefit mostly from that trend, and they are considering actually a total ban on future offshore gas exploration. So with that in mind, the key to us is to understand how the energy mix will change. There's a clear trend towards renewable resources. Solar, wind, but most importantly, solar will become a key green energy production source for the world. But what will happen to oil and gas? This is the key question that we are trying to address. We still believe as a firm that there are interesting opportunities in the sectors, but how can we actually find out where is the right niche to invest without being exposed in a negative way to these clean energy trends? So let's take a look at how crude oil is used. Today, nearly 47% of finished gasoline is basically responsible for half of the oil production globally. So we think that is really the key sector which will be negatively impacted by clean energy trend is oil that goes straight into gasoline production. We could be talking about $40 million barrel per day, which in 15 to 20 years will evaporate. So this is a key trend which we are very aware of. And when we look at, for instance, oil and gas projects, when we invest in a couple, we always look at projects which have a strong component of gas, natural gas. So why natural gas? Is actually interesting enough a beneficiary, we think, of clean energy trends. I'd like to mention, first of all, that renewable sources are clearly at a huge disadvantage to conventional sources of energy because of the intermittent nature of energy production. So, of course, solar and wind requires a lot of filling capacity coming from conventional sources when it comes to guaranteeing a base load of energy across the day when there's no wind or there's no sun. And it turns out that obviously natural gas is the key driver and is the best source of intermittent energy. To give you an example, it takes 3 months to turn on and off, essentially, effectively, a nuclear power plant, 3 weeks for a coal power plant, but only essentially 3 minutes for a natural gas power plant to go immediately up to full capacity. This is a massive advantage for natural gas because it can be used as filler for particular utility scale solar when essentially there's a cloudy day or overnight. So essentially, come to a conclusion, our view on how natural gas and oil will be impacted by clean energy is the following. We are quite negative on oil because oil is very much relying on demands for internal combustion engines, which we think is going to be affected significantly by the electrification of the fleet because of the battery storage coming down dramatically. But we are extremely positive on natural gas. We think natural gas could actually play a bigger role going forward together with nuclear and really complement effectively the overall energy mix in the next 20 years when we will have a stronger component coming from clean energy sources. Having said that, I think we can't say today that we are negative on oil price or we're bearish on oil price. That is beyond the impact of this, the meaning of this presentation. We think geopolitics will still be a key driver for natural gas and oil prices. This is more an observation regarding underlying volumes and underlying trends. So with that, I've finished and welcome questions, or we can get straight to the refreshments.
Excuse me, you're from Italy, I presume?
Correct, yes.
Okay,
you guessed correct.
Mille grazie. Okay, thank you very much. Actually, I know we are from the same part of the world. I'm from Switzerland, and you're talking and you have exactly the same problem. We have the world's cleanest energy in northern Italy, in Switzerland, is hydropower, and our power plants are not making any money anymore, despite being built 50 or almost 100 years ago. So not to challenge your figures, but how does this fit into particularly the European energy policy if the cleanest energy, which is hydropower, it's been pretty much fully amortized, and yet it doesn't make any more money? So how does this fit into the equations you have presented? I'm not doubting your presentation, sure. I just, thank you very much.
Well, I think hydropower in terms of levelized cost of energy is clearly one of the most competitive. It's always been, unfortunately, a bit of a rounding error for energy production in Europe, whereas I think solar has the power to be expanded. It's not really constrained by geography, but only by latitude, by radiation level. So I think that's really the key to understand how solar is, I think, the clear winner. I agree with you. Overall, hydro energy is cleaner in a way, because with solar you still have the waste material generated by the panels. But overall, let's keep in mind that solar panels are effectively confirming to last more than 25 years. So there's a lot of time to deal with them properly. And so yeah, I don't think, to answer your question, hydro energy will still will represent a big component of energy going forward in Europe, unfortunately, although it's still a very clean source of energy.
Yep.
A quick question on the first slide. You have the solar, the residential solar. You said is probably the most promising, while the cost of that is actually dropped less than the utility scale solar, right? So can you elaborate a little bit on that and why you think it's the most promising?
No, sorry, I meant utility scale solar is the most promising. That was my message, yeah. So utility scale is still the most promising, but residential I think is also very interesting, because on the one end, the cost per panel per kilowatt hour produced is dropping less than utility scale solar. However, you have an intrinsic advantage whereby you don't have really the cost for distributing electricity. So it's a huge advantage to have just distributed electricity on households, on factories, which will enable an overall cost, including both transportation and distribution, to be much lower than what you have today with utility scale solar, where you also need lots of copper and a lot of grids to distribute electricity. So in some cases, like we see already in some jurisdiction where you're looking at projects, there's a complete opportunity to become self-sufficient for residential units, whereby they can basically get off-grid, take a very effective battery, and become completely self-sufficient from the grid. And that could be the trend in many latitudes going forward. So that could make distributed solar also interesting at the same level as utility scale solar.
Yes, Brian.
Hi, Brian Anderson. Just a question on the battery side. What do you see being the bottom of that price? I mean, it's gone down 77%. Are we reached the bottom already? Pretty close to it? Is there another step?
I'm not the expert, of course. We're looking at always aspect validation in these things, but our understanding is that, yes, we probably reached the bottom. And unlike in solar, where I said silicon is extremely common material to be used, there's no real bottom for the actual commodity. Lithium it is not cheap, and it will not, it's also quite expensive to manage in terms of waste. So yeah, probably it's close to the bottom. However, having said that, lithium might not be the final destination for battery technology. So hydrogen and other technology could actually become even more prevalent. But for lithium, that's probably the bottom, yes. Which still makes, I think, the key to consider a car like Tesla 3 being able to market it at a cost of $25,000 with a battery of 50 kilowatt hour. So that's low enough for those cars to be competitive with internal combustion. So I think to answer your question, it's probably the bottom, but it's already driven the cost of battery low enough for mobile transportation to be competitive with internal combustion engines.
Hi, Michiel Melke. One question. You're factually showing the costs, which is great. Costs are going down. But what about space? Because I've been involved in some wind and solar projects both in China and Europe. But obviously space is becoming a bit of an issue. Because the good thing about a 2,000 megawatt gas-fired plant, I mean, you don't need that much space and you've got 2,000 megawatt. But to make 2,000 megawatt of wind or solar, you need quite some space. And how do you look at the fact of space becoming far more constrained maybe than we all expected? And therefore it's not just about costs, like dollars per megawatt hour, but do you actually have locations where you can build and put all these solar panels and wind?
You're right. That's definitely a very good question. Yeah, I haven't seen any specific analysis on how space will impact the cost, but it's definitely like the example I made earlier for utility scale solar of 2 cents per kilowatt hour relates to Saudi Arabia, where they're putting essentially lots of panels in the desert, and there's no cost for space there. But you're right. In other jurisdictions, there'll be a point where putting panels on the roof of factories, roof of houses will be not enough to generate what is required.
Sorry, one more question. The use of electricity and batteries in cars, are you seeing the change to composites, very light cars, very light transport generally, as being not yet fully factored in and probably likely to be very important?
Yes. We've been advising lots of auto OEM. The key there is that all the traditional OEM have basically retrofitted their models into electric vehicles, whereas Tesla, for instance, started from scratch and they used composite materials. So there's a lot of potential for these large OEMs to convert and to adapt to green energy more than what they now, because now they are really pushed back by internal politics, because electric cars don't require service, and therefore internally the like of Mercedes, Fiat, BMW don't want their clean energy vehicles to succeed. That's really what they're pushing them back, but there will be a point where they realize there's no other way, and they will start to invest massively in clean energy, and at that point you'll see more of a composite material to be used, and similar to what Tesla have done, I think that's already probably embedded into these performances, but not for the OEM. But for Tesla, yes, they're really on the forefront on using composite and completely designing from scratch a vehicle as opposed to retrofitting from something which has a much harder and heavier chassis.